Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. It is March 8th, and let's get started with reports. Stocks are having a good day this morning. We have seen a little bit of easing in the trade wars, but China and Europe, there's still talk of retaliation if we impose tariffs on aluminum and steel. Why are we talking about that when we're talking about mortgage rates and bonds? Well, it impacts inflation. If it costs more, which is what investors are worried about, if it costs more to produce it here versus import it, that means the cost to build goods is going to be higher, which creates more inflation. So that's putting some pressure on bonds this morning, and it probably will continue to until all of this stuff gets worked out. We are seeing a little bit of relief from initial jobless claims, even though they did hit their 50-year low. They did miss their mark today. And so that has been a little bit helpful. So a little bit of a mixed bag of news. But I think the big thing is going to be non-farm payroll. That comes out tomorrow. And that's what really investors are really keeping an eye on. Again, one more report that impacts inflation, but that has a big influence on how these bonds trade and what kind of interest rate and rates consumers are going to receive, moving forward. So let's get started with the charts. Here's where we're at. As you can see, a downward trading channel all the way from early January to late February, and then we did find some plateaus, kind of some flat trading. This was really a nice relief because this was a pretty sharp down trading channel, and man, it just was like, when are we going to find this floor? Well, we found it. So this is great news, but don't get too excited. It may be short-lived, and that's what a lot of the analysts are saying. So we still have quantitative easing, which is putting more pressure on these bonds to actually sell off. So be careful out there. Now let's we do believe bond trading will trade flat for a while, but we'll get into the forecast here in just a second. Now, to kind of quantify where we're at, Freddie Mac released a report, the link's down below, that February 2018, the average consumer was at a 4.33 rate and paid 0.6 points to get there. Now, if trading was averaging about 102.90 and we're only trading 102.34 today, that's about a 56-cent difference. That means the average consumer, to try to get a similar rate today, may be paying over a point to try to get there. So that's kind of where we're at right now. But at least things are kind of leveling off. That's the great news. Now, last forecast was a hit. We made it. Always great to hear that. I hate to be inaccurate, but hey, it happens to everybody. But last forecast was a hit. And as far as the new forecast goes, the analysts are relatively inconsistent. Some are neutral, but most are bearish. Meaning that they think bonds will sell off. In the long term, again, pretty consistent across all the analysts, very bearish on the long term. So what do I think? Well, let's get to it. We're currently trading at 102.34. I think the high that we're going to hit over the next week is about 102.53, and the low could be as low as 101.90. So that means we're at a 44-cent loss potentially, if I'm accurate, or only a 19-cent gain. So I think, if you have an option to lock or not lock, I think you have definitely much more risk with not locking than if you did lock. If you don't lock, I don't think you're gonna improve that much. Like I said, maybe 19 cents, but 44 cents. I mean, that's almost half of a point if the market sells off. So and analysts right now are actually agreeing with me. We're all kind of taking a locking bias ahead of tomorrow's report just to be safe. Anyway, that's it for this week. We'd love to hear you. Leave those comments down below. We answer all of our comments, and I have to say it, don't forget to hit like before you leave the page. And if you'd like to subscribe, you're just going to get a little notification when we release new content. Just click at the top left, and that will get you subscribed. And if none of this really made sense to you, and you're like, hey, I don't understand why these charts and bonds, why that impacts me trying to get the best mortgage rate, click Mortgage Bonds 101 at the top left and at the top right, and that will teach you the basics that you need to know as a consumer on how bonds work and how you can try to get the best mortgage rate possible. Anyway, that's it for this week. We'll see you next Thursday. Take care, everybody. Bye-bye.